All right, let's talk about one of the most powerful and, honestly, destructive forces in crypto trading. FOMO. Yeah, the fear of missing out. It's that emotional gut punch that turns smart traders into pure gamblers, especially when Bitcoin starts doing its wild, volatile dance. Come on, you know the feeling, right? You see a massive green candle just shoot out of nowhere. Your phone starts buzzing like crazy. And this primal urge just takes over, screaming, "You have to get in now or you're gonna miss the rocket ship." That feeling, that panic, that's exactly what we're gonna pull apart and conquer today.
So, at its core, FOMO isn't a strategy. It's more like a psychological hijack. Think of it as this messy cocktail of anxiety, greed, and impatience that just completely short-circuits your brain's logic. It tricks you into chasing a price, and more often than not, you just end up becoming the exit liquidity for the people who got in early.
So to tame this beast, we're going to break it down into 5 key parts. We'll look at what a FOMO trade actually is, build a solid plan to fight it, work on the psychology behind it all, and then we'll compare smart entries versus those purely emotional ones. Let's dive in.
Okay, first things first. We have to understand our enemy, right? What does a FOMO trade actually look and feel like? Once we break it down, we can start to see those warning signs way before we get caught in the trap.
You know, it's so important to get that FOMO isn't just one single feeling. It's this toxic mix of really powerful emotions. You've got the greed for those huge profits, the fear of being left in the dust, that jealousy when you see other people posting their wins online, and then the impatience that just stops you from waiting for a good setup.
So what actually pulls the trigger on this emotional train wreck? Well, in crypto, it's like a minefield out there. It could be that sudden 20% Bitcoin pump that just explodes on your screen. Or it might be some rumor on FinTwit that's spreading like wildfire. Heck, it can even be your own overconfidence after you've had a nice winning streak. The key is to see these things for what they are. They're just provocations trying to get you to act impulsively.
And this right here is the classic mistake. This is basically the picture-perfect definition of a FOMO trade. You see this gigantic green candle, and your brain just screams that the price is heading for the moon. So what do? You jump in, right at the very top, usually just as all that momentum is about to completely burn out.
This cycle is just so painfully predictable. It all starts with the pump, and that triggers your panic. You throw your strategy right out the window and you buy high. And then, almost immediately, the market does what it always does. It pulls back. And just like that, you're left holding the bag, wondering what on earth went wrong. The answer's simple. You let your emotions drive the trade, not your logic.
Okay, enough about the problem, let's talk about solutions. The single most powerful weapon you have against FOMO isn't just willpower. It's a plan. A cold, hard, data-driven plan that you make when you're calm and totally rationing. Think of your trading plan like your personal rule book. It has to be written down before you even think about risking a single dollar. It defines everything: which asset, the exact conditions for entry, where your stop loss is, and your take-profit target. If the market doesn't check all your boxes, you do nothing. It is that simple.
And here are 3 really practical technical steps you can take to get some perspective. First, zoom out. That huge green candle on the 5-minute chart might look like a rocket ship, but on the 4-hour chart, it could be slamming right into a massive wall of resistance. Second, learn to spot the traps. And third, and this is a big one, wait for pullbacks. Letting the price come to you is what the pros do. Chasing the pump is what amateurs do.
This is so crucial. You have to stop staring at charts all day. Being glued to the screen just fuels anxiety. Instead, do your analysis, figure out your key levels from your plan, and then set price alerts. Let the market come to you. This is how you act on your strategy instead of just reacting to all the market noise.
So having a technical plan is half the battle, but the other half, that's winning the war that's going on inside your own head. Trading is a mental game, and mastering your psychology is absolutely non-negotiable if you want to beat FOMO for good. This chart just perfectly contrasts the 2 mindsets. The FOMO trader is reactive, impulsive, and anxious. They're always chasing price because they have this deep-seated need to win on every single move. The disciplines trader, though, is the complete opposite. They're proactive, patient, calm. They don't chase, they wait for their pre-planned setups to come to them, because their main goal isn't just to win, it's to manage risk.
You know, this is one of the most freeing ideas in all of trading. You have to accept that you are going to miss moves. You're going to miss some huge pumps, and that is perfectly okay. Your goal isn't to catch everything. Your goal is to consistently execute on your specific high-probability setups. Believe me, missing a trade is infinitely better than forcing a bad one and losing money.
Okay, these are your non-negotiable rules. Number 1, trade smaller when the market gets crazy volatile. 2, always use a stop-loss to define your exit before you even enter the trade. 3, treat a giant parabolic candle as a warning sign, not an invitation to jump in. And 4, keep a trading journal. It's like your secret weapon for accountability, helping you see the decisions and the emotions behind every single trade you make.
All right, let's bring all this stuff together and actually see it in action. We're going to compare what this looks like on a real chart, putting that destructive FOMO entry right up against the patient, strategic, smart entry.
And there it is. This is the classic FOMO entry. The price has already gone completely parabolic, momentum is totally exhausted, and the emotional trader, terrified of missing any more upside, buys at the absolute worst possible moment, the peak. We all know what happens next, don't we? And now look at this. This shows you the difference beautifully. The disciplined traders saw that same exact pump, but instead of chasing it, they waited. They watched the price pull back to a logical planned level, a previous resistance area that's now acting as support. They waited for confirmation that buyers were actually stepping back in, and then they entered. Lower risk, higher probability. That's the name of the game. So let's just quickly recap the key takeaways here. First, have a written plan and stick to it like glue. Second, tune out the social media noise. It is designed to trigger your emotions. Third, master your inner game. Focus on executing flawlessly, not on having flawless results. And finally, trust the process. Accept that you'll miss some trades, and just know that in a 24/7 market like crypto, another great opportunity is always right around the corner.
Look, beating FOMO is really a journey of self-awareness. So what's your personal trigger? Is it that slow grind up that gets you, or is it those explosive weekend pumps? Really thinking about that is the first step to mastering it. Let us know what you think. Thanks for joining me.